I would like to say one quick thing that we were doing some math. I'm not very good at math, even though I'm a banker. We were trying to figure out on this golden apple panel how many years we were doing it. I think it's 24. And Bill Rudin wins the prize now for being at every single golden apple panel in 24 years.
I
was with him.
I was in high school when I started coming onto the panel. Record.
And actually, the majority of these people have been in this panel, and Scott has been in this panel, as has Marty, for many, many years. So this is always thrilling for me. These are all friends. These are all people I know for many years. So this is going to be like a bunch of people getting together and just talking. And that's the way I want to do this. I'm not going to ask. I'm trying to be as less formal as possible. But let me start with the ends and not the beginning of this. And I'm going to ask the panelists, and we'll go up and down. And just one thing, that Jeff Blau may have to sneak out a little bit at the end early, but it's no insult. He has another meeting, but we appreciate that. So if he leaves, I'll make sure he gets as much in as possible, as early as possible. If you were to think of three things that are the most important three things for the revitalization of the city, it could be the country. I don't want to bring up the word politics, but it's up to you. The geopolitical situation is up to you. What would they be? And what would you say if I were to ask you that? It's a tough question. I know you weren't prepared for it, but Scott?
I thought we should start with Jeff because he's...
Oh, you want to start with Jeff? He's leaving.
I'll do it. I'll give him a chance to think about this. And then, I think the three things I would start with is leadership. And we heard a lot about that from Larry and a lot of people today that, we talk about New York always comes back bigger and better. That's not preordained. That happens because there's leadership. I would say commitment to community, which this panel and the people here, I think, all espouse on a regular basis, and optimism, because you need to continue to work through hard times, and when you're in the fog of war, know you'll get to the other side of that and be optimistic for the future.
Bill?
I agree. I think harnessing the power of the people inside this room and outside the room, the young people who have great ideas and can roll up their sleeves and get things done. And that's what Larry talked about in terms of what my dad did. There's an article that just came out in the Commercial Property Executive Report, Quieting the Urban Doom Loop. And it talked about what my dad and others did in the 70s. And they didn't give up on the city, and they came together. And it was out of fear because they could lose their the real estate when the people were leaving the city. But they showed that leadership that Scott was talking about, brought people to the table, Governor Carey, Mayor Koch, and fought through the pessimism and really, showed what you can do when you can bring labor, business, all the stakeholders together to solve a problem, and that's what we have to do now. So,
Yes, and I also think we build buildings, but we also build companies and we build people. I like this conference because you are, in many ways, the future, and the rookies out there matter greatly to what we need to do for this city to make it more livable and to improve the quality of life.
So the heart of the city is...
Remember, Marty, three things.
I got three things. The heart of this city is its economy, and we have the greatest labor pool of any city in the United States. And my first thing is housing, because we need to be able to house those people, otherwise they can't work here. You heard the governor talk about it. And the second thing is safety, because those people need to feel safe in this environment. I know the mayor really has harped on that. And the third is what Scott said, is leadership. We need to elect the right officials so we can keep all those things going.
So I would say, specific to New York City, the thing that always made New York come back is that young people always want to be here. And that's true, I think, more than ever today. Yes, we had some people leave New York, but today, if you talk to companies, you talk to CEOs, where you talk to people at universities today, where they want to go after they graduate is still New York City. And so it's our job to make sure that New York always remains attractive for young people, because the reason companies put up with some of the things that might be difficult here, taxes and traffic and cost of real estate, is because they know this is the #1 place for talent. And so to me, the quality of life issues that the governor was talking about, safety, security, cleanliness, homelessness issues, mental health issues, taking those issues off the table so that New York remains the place where people want to come when they graduate is the most important thing we can do to grow the future for New York City.
Who was here last year? Hopefully people were here. What did this panel say last year across all the people? Every single person said the same exact thing. No one remembers?
Interest rates?
Safety, safety, safety. There was no other discussion of anything else. It was just feeling safe and dealing with crime. It's changed. I get a sense of optimism. We've changed a little bit.
It's
What changed?
It's changed because, the statistics have, come down. The mayor and the governor focused on the crime issue. Some people, there's the perception reality, but you walk out when you leave today and just see the activity, and that activity was there before the Christmas tree, and the restaurants are full, and as the governor talked about. And so we have definitely come through the hardest part of COVID. We have other issues. We have high interest rates, lack of liquidity, lack of affordable housing. But again, it comes back to, historically what we've done, and we fight for what we believe in. And so the people up on the stage, Larry shows incredible leadership. Hopefully our, other elected officials listen to the governor and the mayor and realize that they have to do certain things to make sure that our city moves forward. It's not ordained. There's nothing written, as Scott has said, but you have to be optimistic, and you have to fight for what you believe in and stand up. Our industry needs to have a voice. As Larry talked about before, real estate, for a lot of people is a negative, landlords, owners, however you want to describe it, are perceived as negative. And we do contribute a lot. We're on these boards. We are showing, leadership within our company and out. So it's incumbent upon all of us to get involved with community boards. I was on a community board when I was in my 20s, community board number 5, and I learned a lot, understanding what the balance between development and what the community needs. So we have to be cognizant of that. You have to, understand what other people are looking for, and it's tough. You spend time and effort going through the zoning changes, and you spend a lot of money, but in the end of the day, you have a great product. And so we have to make sure that there's an involvement on every level, and that's an important, I think, takeaway for the students in this room, that you have to really, it's hard work, but it's a great industry, it's fulfilling, and you meet a lot of great, interesting people.
MaryAnne, you're one of the largest advocates of affordable housing in the metropolitan area. Safety is an issue. What's the relationship between providing affordable housing and the perception of safety? If we provide housing,
it just makes the city more accessible and more livable for the people who make the city tick. And so I just think it's a travesty of sorts that the people who keep us safe, who fight our fires, who teach our children, can't afford to live anywhere close to the urban core. And so where they go and how they stand up their lives probably is, it's Maslow's hierarchy of needs. And basic safety is food security, housing, and some line of sight to prosperity. And I think all of that is deeply challenging for a large sector of New Yorkers, and that's problematic. So I think what we're facing is just, in my experience, a new definition of hard. Like I think there's a lot of joy in this business, but and I tend to lean into the really difficult stuff, and trying to close 2 ground-up developments that are eligible for the 421A program that's expired. It's 400 units of housing, and one closed last week. and the other will hopefully close next week. And I would put the difficulty of execution on these two buildings, one on the Upper East Side and one in West Chelsea, right up there with building Barclays Center, where there was 10 years of delay, 35 lawsuits, and a great financial recession. And the idea that these could be on par with each other, I think just illustrates just how challenging it is to do the things that we need to do to make the city thrive.
You know, essentially, Scott, I had an amazing conversation with you. Tell us about what's going on in the Brooklyn Navy Yards, because it is housing, a different kind of housing.
Right.
But it's something that ties into safety and ties into everything we're talking about. But it's of the moment and it's real.
Before I go, I just want to say jump to one other thing, because I think, you focus on safety. When we were sitting up here last year, it was a crisis, right? There was a crisis of people being fearful to come back to the city. And what it demonstrates, though, is that government is really good at responding to crises, but what they're not good at is proactively trying to prevent the crisis from happening. And that goes a little bit to what MaryAnne's point is. But there's a crisis looming, right? All of us know there's a crisis looming of affordable housing, of our budgets being out of whack. But until that crisis blows up, there's not the political will to address it. And that's the challenge that we, I think, as leaders, have to find ways to put our own parochial interests aside and find ways to cooperate with others to bring that to the forefront before the crisis explodes. Because when the crisis explodes, it's much more painful, right? The amount of economic scarring and scarring on people's livelihoods is much deeper and much harder to recover. So I think it's important that we address this, and so that's I think a key thing. And speaking of crisis, one of the crises we're facing is the migrant crisis. And we were talking earlier about a project we have in Brooklyn across the Navy Yard, which is an old printing press building, a complex, and we're...
My father worked in the Navy Yard in World War II, building ships.
All right, there you go.
And,
Good.
But now it's
Maybe
housing.
went to our... Right, so now you're giving away the punchline. But but in any case, we're rezoning it right now for multifamily, but while it's going through that process, we're now one of the largest centers for migrants that are living there and that have come over. A lot of people from 30 different languages are spoken there. And what you see is people, risk their lives to come to New York, come to the United States because it's the land of opportunity. And they're here, but they can't work. And as each day that goes by, they get more frustrated, and that frustration then bubbles over. And so, it speaks again of another potential crisis and the crisis of crime, right? If we don't enable people that are here to ultimately get out into the workforce and be able to care for their families and earn an honest living, then it could diffuse itself into something that is much more challenging on our community. So we got to be proactive at trying to resolve some of those issues.
Yeah, Marty, do you have any view on how to solve this migrant crisis we have, and the view and the perception of the negative impact in New York City?
Well, first of all, I think we need federal help. And both the governor and the mayor have been working on that, because that'll go a long way to writing our budgets and being able to provide the right services for them. Obviously, we want, I know you're very passionate about this, Rob, we want the migrants to be able to work. They're coming here for a better life. They should have an ability to work. That's another federal issue we're trying to deal with, and with the Venezuelans that already got solved, but now we have everyone else we have to deal with. So that would be a positive for the economy if we can put these folks to work instead of just having them sit idle in their buildings or in the streets.
I asked the governor directly, why can't we reduce the time requirement to offer people who came to this country who want to work? They suffered and came here, and yet we have these ridiculous regulations which prohibit them from working for I don't know how many days, 120 days, 150 days?
Right, well, and then that's to qualify for asylum, and then they can work for...
Right, and then if you hire them as employers, if Jeff hires them, and get to you and Jeff in a second, you could be arrested by the federal government. Can you imagine that they hire willing people wanting to work? The governor said there's tens of thousands of job openings, and yet these people would be arrested.
She has 40,000
them.
jobs alone for them. She
Right.
said 40,000 jobs.
Right. Jeff, you are one or the largest developer in New York City, transforming the entire west side of New York to an amazing place. I will take credit, not personally, but as Deutsche Bank, of helping you finance that platform. But for the platform, you would not have the West Side Yards. You knew I would say that, right? But for that platform, plus a few other taller buildings. You just accomplished an amazing feat on repurposing and releasing a large vacant building, which could be a model for part of the resurgence of New York City. Could you get into some of what is going on in the West Side Yards right now, including some of your casino bets, what you're trying to do?
So I think just starting with really our view on the office market, and people call all the time and say, well, what's happening with all these buildings, and is there a future of office? And the answer is, I think there definitely is a future of office. And I think we've proven that if you build the right product, new product in the right locations, that companies are still interested in great office space. Some statistics that are incredible. We leased more square footage in the last 12 months than any other time in our history. And all of it at triple-digit plus rents. And it's what the thing that convinces CEOs to lease space in this market when they could lease space across the street that might be much cheaper is using office space, brand new office space with all the amenities and features to attract people back to the office. So for example, we have across our campus at Hudson Yards, 80% of the people show up to work every single day. 80%. That statistic for the balance of New York City is somewhere between 55 and 60%. And so when CEOs can think about their office as a way to attract and retain talent, the incremental rent becomes a little bit less relevant. And the best example, which you were referring to, just this week, we finalized a deal with Wells Fargo to take an additional 450,000 feet at Hudson Yards, reaffirming their commitment to New York City, making New York City the headquarters for Wells Fargo from San Francisco. So a huge, huge commitment to New York, and even more so, when we built the first phase of Hudson Yards, we believed that the real upside was always going to be the residential and the retail. Well, fast forward, we might have been wrong on that, but fortunately, the upside came in the office. And so what the space that Wells Fargo is actually leasing was space that was occupied at the top of our retail by Neiman Marcus, who filed bankruptcy in the middle of COVID. And we were able to repurpose that and create these incredible large floor plate spaces for Wells Fargo. So we are true believers in the future of office, the right type of office, with everything that companies are looking for today.
So are we going to have to travel to Las Vegas to go to the Wynn, or are we going to go to the West Side Yards? Give us a little insight to what's going on with the casino. The governor's gone. So you had your chance to lobby, and that's over.
So we're not allowed to talk to the governor. So 7 years ago, Governor Cuomo authorized 7 gaming licenses. 4 of them were issued upstate back then, and 3 of them were deferred for 7 years to give upstate a chance to get ahead. Now this governor is committed to issuing the balance of the 3 licenses. So there's a process that's ongoing right now. We don't know exactly when bids are going to be due or when a decision will be made, but ultimately we decided to team up with Wynn Resorts from Las Vegas, and we are competing to compete for one of those licenses to put a Wynn Resort New York City on the Western Rail Yards and really use that as the catalyst to redevelop, to finish the yards. And that finishing the yards will be a Wynn Resort, restaurants, entertainment, nightlife.
So what, a mere $4 billion, $5 billion, what's the number now?
What's that?
What's the number, the anticipated cost of that?
A lot.
A lot.
So it's about 1,700 hotel rooms, a 2 million square foot office building, and a residential building with market rate and affordable housing, 6-acre park, and a public school. So that entire complex will cost over $12 billion to develop. And so that catalyst is so critical. And so making that happen in New York City is something that I think will create the most number of jobs and really provide a stimulus that New York City could use right now. So we're excited. We think we're going to win.
We're excited. I don't like flying to Las Vegas.
I used
Marty?
to be competing with Jeff on that
Right, so
side.
now he can help me.
I'm no longer competing with him. But I agree that and Scott has something out on Long Island, so I believe it should be in the city as well for a lot of different reasons. So I agree with Jeff, and it's going to be a great stimulus. But the draw from the city I think is better than something that's not close to proximity to all the surrounding areas. So.
You have a lot of not in my backyard people on some of these projects. There's no backyard there. You have the Hudson River and the road. So
Well, Mary and I don't have any gambling.
no
But I
casinos.
do think the point about New York, I mean, this is something that will be on the international scale, will attract tourists to New York City from all over the world. And if you think about where people want to come when they come to New York, it's Manhattan. It also is adjacent to Javits and really becomes the Javits Center Convention Hotel. And so we think this will provide a lot for New York State, for New York City, and the people of the community around us. So.
Can I just ask, just given that the governor obviously wants some wins, like what's actually standing in the way of it actually happening?
So there's a process. There's a state gaming commission that has to first tell us when the RFPs will be due, which we don't know yet. And then there's a process, both a community process, and then a state process, which state gaming board will ultimately make that decision. My guess, if I were to guess, is that bids will be due sometime in February, and it could be, the best case would be end of 24, most likely first quarter of 25.
And I think you hit it a couple times, Jeff, right? I mean, I think the ideal metrics that they're focusing on, right, is which is going to be the most transformative, what can spark economic development.
Highest economic development impact.
Right, and then the second thing though is in the time frame, and that's one of the challenges that Jeff's dealing with, right? Because the scale to build that and what time frame of delivery, because part of this is also to help deal with our budget crisis, right? That we have in New York, and so this is meant to be something that helps resolve that as we go forward.
I'm going to come back to Marty in a second based on something that was said last night. But I'll come back to you on that. So it has to do with interest rates and things. But I just want to stick with development for a second. I commute for the last 40 years. Scary to even say that. On Metro North. And when I used to go up and down the line, there was not one apartment building along the line. If you go up and down Metro North from White Plains south, all you see is brand new, tall apartment towers, most of which a lot of them are built by you in New Rochelle and now in White Plains. The governor of New York State mentioned, which I was shocked with her knowledge of that. You probably told her what to say, but that's okay. The idea of transit-oriented development as an alternative. So I can go rent a one-bedroom apartment the size of my kitchen, and it's a decent-sized kitchen, not gigantic, but it's a nice-sized kitchen, for $3,500 a month or $3,800 a month. Or, I'm told, in New York City, it's $7,000 a month, and live and commute for a half hour. What is driving your success of those towers from New Rochelle, White Plains to New Rochelle?
And so,
and where do you see the future of that happening? Will we be seeing more?
Yeah, well, it goes to what I think we all have said, right? What drives the success of New York City is talent, right? And for a city to continue to be successful, it needs to be able to have an expanded level of affordability like we're talking about, right? And the broader the talent pool, the better. So if you think about New York City proper, that's 8 million people. If you now look at our transit system and say, if I can go out to the rail and go, within a 50-minute ride to New York City, all of a sudden I have over 20 million people that can come back to New York City. And I now provide them with affordable opportunities. Now, the way that people live and want to live is different than what it was in the past, right? Not everyone wants to live in a white picket fence suburban area. So these urban, suburban downtowns that are located by transit provide a quality of life that has diversity, walkability, a sense of culture and character that is consistent with living in the city, but you're not living in the city. And to your point, it could be 30 to 50% less for a similar, better product than if living in the city. So it's a way to be successful. And what I will say is for every city like New York, a superstar city needs to be connected to an interconnected superstar region, or it's not going to be sustainable. Eventually, the capacity of people coming in becomes the challenge that they can't be overcome, just like we're talking about. It's too costly to live, too costly to send your kids to school, too costly for your housing. So that quality of life that Jeff was speaking about eventually breaks down. So having that outlet of this interconnected region is a big competitive advantage for the New York metro area with the Long Island Railroad and Metro North, and now particularly with the reopening of the Grand Central, where Long Island Railroad now comes into Grand Central as well.
You know, sticking with the Regional Plan Association and their statement, I believe this is a regional solution. Billy, solution, sticking with development. You will be or are involved in some of the largest redevelopment projects other than the J.P. Morgan Tower in Manhattan right now, in conjunction with Vornado. And could you, I don't want to say something wrong, so you could say what you want and who's involved, but it's very exciting. So is the epicenter from, and Jeff, you could argue with this, it moved from Midtown to the West Side Yards. I personally believe that the epicenter of New York City is moving back towards Midtown, and specifically the Grand Central Station area. Can you talk about your projects?
Well, I argue, and Jeff and I and Marty have had these discussions before, that this city is so, since coming back from the 70s crisis, we've proven time and time again that that what makes our city great is its growth. And what happened in Midtown East, 10, 15 years ago, there was no ability to expand. And so Related, God bless them, took the opportunity and got the Hudson Yards and was able to attract tenants who couldn't find that new product that Jeff talks about as so critical for their future growth. But things started to happen. The Midtown East, rezoning in 2017 got done. Mike Bloomberg tried to get it done. It didn't happen. De Blasio comes in. It's probably one of the best things, things that he did accomplish. And right after that, J.P. Morgan announced their commitment to build a new headquarters on their site at 270 Park Avenue. And that really, I think, unlocked the negative perception of Midtown East, which is throughout the world perceived as the main business district with the connectivity to Grand Central, now Long Island Railroad right there. So, and Steve Roth of Vornado was one of the key architects of pushing the real estate board in the city to allow the upzoning along Park Avenue and Madison Avenue. And they have a site at 350 Park Avenue that was built originally in the 60s by the Uris family and became manufacturer Hanover Trust headquarters, which was bought into J.P. Morgan Chase many years ago. Interesting side story. When MaryAnne came to us, John McGillicuddy is the CEO, and said, we want to expand behind 350 Park. Will you help us assemble these townhouses that were there? And so we started assembling the site where we eventually built 40 East 52nd Street. And then somewhere along the line, Union Carbide, which had built 270, beautiful building done by Skidmore, Owings & Merrill, had decided in their infinite wisdom to move to Danbury, Connecticut, easier commute for you, but literally in the middle of nowhere. And they built a $400 million building. They sold 270 to MaryAnne for $100 million. My dad always joked that Union Carbide built a $100 million building for $400 million, and MaryAnne bought a $400 million building for $100 million. And when Union Carbide went bankrupt, because they had a terrible accident in India, there was they were short $1 billion. And if they hadn't done all that maneuver, they would have had that money to do it. So we assembled the site. They moved out, sold the building to Vornado. We built a building where Bank of America, then BlackRock was our tenant. BlackRock decides to move to the west side, and Steve Roth comes to us and says, let's combine our sites. And we work together on creating a unique design through his relationship with Ken Griffin, the CEO of Citadel, who was growing in New York. He had made a decision a couple of years ago to move his headquarters out of Chicago. Why? Because of crime and political far left thinking. And he decided to make Miami and New York Miami his headquarters, but New York his other headquarters. And they're growing tremendously. So this is a very exciting project. Same architect as J.P. Morgan is doing with Sir Norman Foster, and we will build a 1,700,000 foot
Amazing.
world-class building. Citadel is our partner, so it's a three-way partnership, and there'll be 700 to 1 million feet of space.
So looking forward, and a couple birthdays of mine away, we'll be walking down Park Avenue together. It'll be a much different place. A lot of the changes will be through you, Scott. We owned that building at one time. We foreclosed on Donald Trump. Just so you know.
The Hyatt you're talking about.
The Hyatt. So he once owned the Hyatt. We took back the Hyatt when he was and the headline in the New York magazine was "The Emperor has no clothes." You now have the clothes. You now control that building. You're going to be adding what at the Grand Hyatt?
So just
quickly, so I have to get back to Marty.
Right, but just first, real quick on this point though, because it is a good example of the opposite of what I said before, which this was when government was actually proactive and put policies in place that set the guidelines to say, okay, eventually we're going to have too hold of a stock of office buildings, so we need a Hudson Yards, we need Midtown to thrive and be successful. And with those guidelines, it unleashed the private sector to do what we're doing today. And Bill said what they're working on, we're working on at the Hyatt Hotel and with the air rights over Grand Central, building a 2.8 million square foot mixed use building, an office building.
That could be the same height as One Vanderbilt, similar?
No, it's going to be much higher than One Vanderbilt. It will be the tallest building in the Western Hemisphere.
Oh, wow.
$600 million of transit improvements, which, by the way, is also a big part of that policy. To get the additional FAR to build, you have to trade that by building transit. So we will be rebuilding Grand Central, the extension of Grand Central, underneath our building in that.
But along the way, we also bought air rights that were part of the rezoning from St. Bart's,
Right.
Central Synagogue, and St. Patrick's, which helped sustain these amazing institutions that needed, they have a lot of capital needs, and this will help them. So it was a win-win. It was really a public-private partnership that Scott talks about, and that we all are involved in, because we can't succeed without the government, doing their thing, and then we do our thing.
MaryAnne, what do you think the best public-private partnership opportunity there is on the horizon for you?
For me.
Yeah.
Look, I think the workaround strategy that the governor is committed to, which is to find critical mass and find sites where the government controls or owns the land, is the right way to go until the dysfunction is wrung out of Albany, and I think she's committed to doing it. So do I think the scale is going to be there to the extent that it was there for Hudson Yards or Pacific Park Brooklyn? I don't know. I will say that there's trouble in Brooklyn. The partnership with Greenland for the remaining development, which Forest City kind of sold to Brookfield. Brookfield sold to a Chinese state-owned entity. They're on the brink of default now. And what's unfortunate about that is this whole anatomy of a transaction and how with a certain kind of unproductive hypervigilance, you can wring out the viability of anything. So I think there's a postmortem there about what happened, but what's happening today is that there's enough scale left on that development site for it to be an opportunity, and it cannot happen without the government, the state coming to the table and kind of rethinking some of the...
It sounds you need to get close to the governor and form those partnerships to be the right person.
I still have PTSD about it, so I'm not sure that going back in and working on that is healthy for me and
That's
my
true.
company,
That
but
one,
I'd say that there's a tremendous amount of opportunity and that has still a lot of scale left. But I think that there are opportunities, with respect to government-owned land, and that's what we're focused on, because if she weren't prepared to do the workaround, like she didn't go on.
So surplus land around public housing projects, things like
Government
that,
owns
parks
a lot
that
of
are
land,
not
yeah.
unutilized.
But you have to have the appetite to do it, because otherwise you could be accused of just doing these one-offs. And I think what's happening is her hand is being forced. She wants to build, and she wants housing, And she has powers, and they're very unique powers that the state can employ to get stuff done, and I think she's prepared to do it. And I was heartened by everything I heard from her today. As depressing as the situation is in Albany, she's hyper-focused on these workarounds.
Marty, you're about to enter a whole new world. You refuse to tell me what that's going to be. You'll announce that soon enough. Very excited for you. But you're very entrepreneurial, and I've known you for a very long time. You will find those great opportunities. And we were at a pre-conference dinner last night, and our very smart economist was speaking, and he predicts a 150 to 175 basis point decline in interest rates with a mild recession.
When?
When?
Sure.
When? I don't know. Marty, when?
Over the next year, he said.
Over the next year. So I'm sitting in your shoes. I'm going to be entering into a very entrepreneurial world. People are going to throw money at me to make money. How does that decline in rates affect your view? Is that enough? Is that enough to create the buying opportunities from distressed assets? Is that enough to make things work in the new entrepreneurial worlds? When you and I first met, that's when Apollo was formed. This is in I'm afraid to say this, 1989, 1990, 1991, 1993. Those are when those firms were formed through the creation of the RTC, distressed assets, financing those assets. So where do you see the opportunities with this projected decline in interest rates? And is that enough to prevent the opportunities from happening? I know
Well,
the
I think
answer.
some people would just be happy if it did the 175. Whether it's enough or not, I think we're all going to find ways to figure out how to do business no matter what the interest rate climate is. It's not easy. I feel like we're going to, look, we always have to evolve. Everyone on this stage is a great supporter of New York City. Everyone on this stage has built fantastic buildings. And I still want to do development, and development is the lifeblood of New York City. It keeps New York City evolving. That's why people want to be here. And I had friends in from San Francisco recently, and we walked around New York City, and they couldn't believe the difference between San Francisco and here. And the biggest thing for them was people were out after 11 o'clock at night. You couldn't get into bars, and people are living where they're also working. And that doesn't happen in San Francisco. So we have a really unique place here in New York City. And so I'm excited about figuring out what I'm going to do next, but more importantly, what's going to happen in New York City.
Whatever you're going to do next is going to be a great thing.
Thank you.
I just hope it's somewhere where I could work with you and do things together again. Scott, you should be able to answer this question. You're on the board of the New York Fed. That sounds very impressive to me. I have a question here. What do you think is their view of keeping interest rates higher, or their view of potentially cutting, as we heard last night? I have a hard time believing the cuts can happen, but he was pretty, would you say he was pretty focused on that? It was no ifs or buts. It was.
I'll share my view. I won't necessarily say what their view is.
This is not the New York Fed's view. This is yours.
Right. My view is that I think people aren't listening to what the chairman of the Federal Reserve is saying, what the Federal Reserve regional presidents are saying, which is that they're going to keep it higher for longer, and that I don't think they're going to lower interest rates until there's not a kindle of inflation out of the system. And I think you'll see inflation as the headline number come down, and that's not going to be enough for them to lower rates because they're going to be afraid it's going to come back up. And I think when you watch the bond market being as volatile as it is today, and it come down to what was this morning, 4.3% for the 10-year bond, that loosens monetary policy. That counteracts what the Federal Reserve wants. So when that happens, it gives them a license to keep it higher for longer. And so I don't think the market's listening to what the Fed's saying. And I think that we're going to find that your economist is going to be wrong, is my opinion. And I think we're going to have a recession. Now the question's how deep, how wide, how broad, how long. That's the question. I don't know the answer to that, right? That's really what we're in. But there has never been a time in history where you've had an inverted yield curve, which I think as of today is 281 days that we've had an inverted yield curve.
Where the 10-year is lower than
the
short-term rates. Yeah.
Right? And the longer that it's been inverted without a recession, typically the deeper and the longer the recession is. So, you keep hearing this time is different, this time is different. I heard the same thing, as I'm sure many of us did in 2008, right? We heard the same thing in 2000, heard the same thing in the 90s. It's not really different. It's not different till it's not different, right? It ends up collapsing. And I think the issue, and this speaks to our industry, is it's not going to be evenly spread. And Larry alluded to this in terms of, different cohorts, different income, parts of our people with lower income versus higher income, different parts of the region, different industries, right? Real estate's already in a recession, housing's in a recession, manufacturing's in a recession, certain parts of the country in a recession. If you're a small business that can't lock in long-term rates and didn't do that during COVID, and you borrow off a credit card, you're paying 20%, 22% on your credit card, you can't survive, and you're in a recession, right? If you didn't lock in a rate at a home, you can't afford to rent or you can't afford to buy a home. So everyone's going to be impacted different. So what I would be cautious of is the averages distort the reality of what's happening below the averages. And if in thinking about making business decisions, you got to look below the average to really see how it's impacting your industry, your market, your customer as we go forward. So I think, when we're having this conversation, and you brought up the early 90s, this is very much like the early 90s. Right? And for those of us who lived through the early 90s, it was hard. It's a hard process because it's not like the great financial crisis where it was like a roller coaster ride. We went down and we went up because they injected money. It was this, and it was long, and it's sort of death by 1,000 cuts. But the good news of that is it's also where the real opportunities come because you don't go back like that. So as Rob was saying, that's where the Apollos, all these firms out of nowhere really transform themselves. So for people that are in the industry, while it's challenging for things that you have to deal with, there's, you got to contain it, but you also got to capitalize on this because this is a generational moment where you can really make a difference and position your firm and yourself, for the next series of decades.
Well, I think the opportunities like what we're seeing. We talk about the Class A buildings, and if you look at the vacancies of the Class A buildings right now, they're in the 10 or 11% range, particularly in Midtown East, which we were talking about before. You can't find space. Scott just and Oleon just announced a 70,000-foot deal at 550 Madison with BDT and MSD, a merged, family office financial advisory company, and so that's emblematic of, I'm sure you got excellent numbers. They couldn't find space. They were looking around and they couldn't find what they wanted near Grand Central, Midtown East. And so the opportunity, like our building at 345 Park Avenue, we're gonna have 500,000 feet of space coming back to us in 2 years when KPMG moves to the west side. We've got people lined up outside the door for that space. A building that we own 2 blocks east on 52nd and 3rd, we've got space galore, and nobody's looking at it because it's old buildings, 60s, Emery Roth, wedding cake, low ceilings, a lot of columns, no amenities. So we're waiting to see what happens up in Albany in terms of, and city, where will they allow us to convert that building and others along that corridor to residential. Yep. Marty and Larry and the Silverstein team and us and Nathan Berman collaborated on a building we built in the 60s for Goldman Sachs. They moved out, Drexel Burnham came in, they went bankrupt in the early 90s. We sat with that building for 5 years. Luckily, we had low debt. We paid off the debt, we could carry that building and waited till the world came around. And then the city and the state passed the downtown plan. There was 30 million feet of vacant space in Lower Manhattan, 30% vacancy. It was scary. We didn't know if we had high debt on that building, we would have given it back. We didn't. We hung out and waited for the world to turn around. They allowed conversions of obsolete office buildings to residential, and buildings you could have bought then for $10, $15, $20 a foot, which you can't believe, skyrocketed in value. The Alleghanians and others came in and converted. We went, to 5,000 people living in Lower Manhattan to 70,000 people living in Lower Manhattan today. Larry mentioned 30% of those people walk to work, so it's environmentally friendly. You have families and schools and restaurants, and what they've done at the Seaport with John George and the Tin Building. is just unbelievable. So we're converting 55 Broad into 600 units of market rate apartments, small apartments, but for young professionals sharing apartments, fully amenitized, and we need to continue to do those type of things.
MaryAnne, do you see that as the answer to some of the housing problems? And Marty, you once told me, I don't know what the statistics were, you said south of 42nd Street there's 25, you did a survey of 25 million square feet, and you said maybe 12 of that is convertible?
Well,
That made
That
sense?
was-
Maybe my statistics are wrong, probably.
look, the governor mentioned it today. There's some low-hanging fruit that the state legislation, she needs their help, but between the mayor and the governor, they want to make more buildings eligible for conversion, and they can do it pretty easily. Right. And so that could happen. Is it the answer? No, it's part of the answer. It's fixing two classes. You've got the class of the obsolete office building and the need for housing, and that in one development, you can do that. So that's something that everyone should be working on, but it's not the answer.
MaryAnne, do you see this as an opportunity from a housing need to serve that need that is so apparent from the governor's speech?
Absolutely, it's one of the potential solutions. I think you need both the city and the state to play ball. I mean, very rarely you're going to come across a building that doesn't require some type of a zoning adjustment and or a tax deal to make it make sense. I mean, there are beautiful sites around New York City that you could build 100% market rate housing and probably convert, but I think the lion's share of it's going to need some kind of a intervention. From
Yeah,
those.
go ahead.
I was just gonna say, again, we didn't even touch upon this, right? But the reality is hybrid work is here to stay. The way people work is different than it was before, right? I think and it's not really terrible because it actually creates, I think, a good balance for work and life, and people can work more and do things differently remotely. But it's 3 to 4 days, right? But what type of buildings they want are different. Yeah. And so now we're going to have empty buildings. And it also impacts our entire urban ecosystem, right? Because we have a subway system and transit system that was predicated on people being there 5 days a week. Restaurants, small businesses, 5 days a week. So we have to rebuild this urban ecosystem to support the different way that people live and work. And I think, Bill's point about Lower Manhattan, I remember having those discussions with you back then at the time, right? Which was, if government didn't intervene, when it did intervene, it could have been another 20, 30 years and it would never have happened.
It took 5 years, which seemed like a lifetime,
Right,
but it goes back to your
this is
point.
the point, right? If we don't intervene now, this reinvention of our urban ecosystem could be a 20-year problem.
Which is why the leadership thing that you started with is so critical.
It's critical because if they don't, and it's so simple, and it's in some of these situations here, that's like almost political malpractice. Yeah. That some of these policies aren't just being instituted, right? And this is where it gets very frustrating for people that care about this city, because you look at it and it's so obvious, and it's not a trade-off to anything else. It's not like you're trading off, you're doing this and you're hurting someone else. You're doing this, and it's the economic engine of our entire region. So if we don't do it, everyone's going to be impacted. And by the way, our budget in New York City 10 years ago was $67 billion. Today it's $110 billion. 10 years. So what happened in 10 years, right? I mean, is crime better, homelessness better? So where will that money go? So if you don't have an economic engine that's throwing off tax revenue, we're done, right? So we have to grow to be able to do that.
Scott, you said something that I was with a CEO from Australia this morning, and he said, I don't know, what is it about New York with the return to work thing? And he said, prior to the pandemic, they were at work 3.7 days a week, and they're at 3.7 days a week now. And I think part of it is that in New York, it was like 5 days a week, hard driving. But the fact is, there's nothing wrong with 3.7 days a week. We have better quality of life. We still need offices, but we need places where people want to come to work. And anyone in this room knows if you're young, you want to be mentored, or if you live in a shoebox, you want to go to the office. Right. Because you're not getting much out of working from home. So I think this whole idea of flexible hybrid work being the downfall of New York City's office economy is just not. It's not.
No, we have to adapt, and that's, I think, always the great, coming back to sort of like what Larry was talking about, and the governor's like, we're a room full of entrepreneurs here, and what we've always done is figure out ways to solve our problem. And so Nathan Berman, who's part of the partnership, and we stayed we sold the building and land, but we stayed into the deal. downtown at 55 because we wanted to see how to do it, and it's not one of our core competencies. So we're learning. But what Nathan has done is he's taken the technology, in terms of the HVAC, and he's got these incredible units that go into the window, and it's just changed the whole dynamics of what you can do. He's also taken buildings that are, everybody said it has to be 20,000 feet, and it can't be done if you don't have that floor size. But what's he doing at New York Plaza? These are 50,000 foot floors. He's putting light wells in the middle of them, and he's creating a million feet of apartments.
The great views.
Which are going to change the whole dynamics, the ecosystem. I was former chairman of the Battery Conservancy, which is right around the corner. We have these incredible playgrounds, and so they're going to be families and kids and everybody going into that park and going to the restaurants, and it's change. You have to. When somebody says you can't do something, don't believe that. Figure out a way. It may take a little more time than you want. You may get PTSD because you've banged your head 500 times because it's frustrating. But don't give up, and be creative, be entrepreneurial, fight for what you believe in. And sometimes you're not going to make it. You're going to fail. We've all done deals where, holy shit, we didn't do so great. But hopefully 7 out of 10 or 9 out of 10, you're going to do okay if you can structure the deal, find those opportunities, and have the right partnership. Bill Bratton, former police commissioner, wrote a book called Collaborate or Perish. And in this world that we live in today, because the capital costs are so much and the efforts are so difficult, you need to collaborate. So that's what we're in every deal. We all have collaborated. We're partners. We have partners, financial partners, and you have to be creative.
No, but just on this collaborate thing, we had a chance to sit with the governor before coming down here today, and one thing was clear to me, which the message was that we can't rely on government to get this done. That they need to rely on us to help force the changes because of the state of the legislature, and Larry laid it out pretty well, and so I don't want to rehash it. But it's not going to get done without us, and so we all can't be pointing to our elected leaders and say, okay, we need you to do this. We have to frame that narrative. We have to take on the responsibility. We have to lead to that change, or it's not going to happen.
That's what my father did back in the 70s. He realized the government couldn't solve all these problems. They couldn't deal with the crime. They didn't have money for police vests. My dad went out and raised money for police officers to get vests. Sanitation, he inspired the real estate board to make sure the owners went out and cleaned the streets. And transportation and infrastructure and financing, bridge loaning the city, to make payroll. I mean, unheard of. And so we have to keep looking at ways to, figure out how to solve these problems ourselves. And when the government sees that we're doing it, they'll wake up to figure out, oh shit, we got to do this. We have to be helpful also.
I mean, a great example of public-private partnership, Marty, is what you worked on in Lower Manhattan at the World Trade Center. There's no greater example than that. And I remember we were going through the clicks. I kept asking you, every time I see you, the clicks, when you go through the turnstile, the electronic card, it's like going to Disneyland, but you go into your office, a little bit different experience. It's a click. And I asked you, how's it going downtown? Is it different than all these horror stories you hear about Midtown? And you told me,
I told you that downtown is fantastic. Downtown is a 24/7 environment, like Bill mentioned before. We went from 5,000 to 70,000 people living downtown. It used to be a 9 to 5 market, and places closed up at 5 o'clock. There was no after hours. Now you've got baby carriages and cultural facilities and bars and restaurants and tons of housing. And it's just a great environment.
We could go on with a bunch of more questions. I could
Are you
speak to you guys
feeding these
forever.
people dinner?
Go ahead.
Are you feeding these people dinner? Because don't you have a conference to throw? I think.
Yeah. No, we're good.
We got to go back to work.
Where am I in time?
I thought we were going to talk about Jeff
And
Blau.
you get 30.
Oh, when Blau left, we were going to end?
Jeff
We're
Blau.
just about finished. But I ask this question all the time, but let's do it again because it's fun. Okay? I'm hearing a lot more optimism. It was very depressing talking to you last year, frankly. I felt I was going to walk out of here and get
That's
mugged.
not what you said, really?
And you walked in the streets, and it was scary. It was a scary time. I see a lot more optimism now. There's a positive focus. I see a whole new industry out there. I mean, Miriam Wheeler from Goldman Sachs said, this is the most important thing that was said today, in my mind, as a lender. She said a very scary but very opportunistic statement. She said 70 to 75% of the CMBS loans that are currently on the books will not have a takeout next year. Think about that.
Sounds very optimistic.
Sounds optimistic.
No, but it sounds. It
No,
sounds
no, no.
sounds
The optimism is opportunity.
opportunistic.
Opportunity. So will the next Blackstone be formed? We should ask that to Ms. McCarthy when she comes after this. Will the next Apollo be formed? Will there be opportunities for employment? I think yes. I think this will be a time to be an entrepreneur.
That
Go
real
ahead.
estate is good operating real estate. It's just capitalized inefficiently or incorrectly right now.
Correct.
So someone's going to come in and fix it.
And the banks, they're going to have to cooperate and write down part of their loans. The developer's going to have to put in real capital, right? But the demand is there. You
Which
all
we're going to
said,
borrow from Deutsche Bank.
yeah. Well, if I mention an office loan at Deutsche Bank
Right.
or any
But
bank,
that is
they will hang me against the wall and say, "Go away, leave us alone, don't bother me again." And that's all I did for 12 years. Who would ever think? Who would ever think that if you chose to focus on office towers for refinancing with guys like yourselves, each tower is $1 billion. Why waste your time in Oklahoma on a $10 million deal?
Right. But that's
Focus,
that's every,
and you would go into your credit officer and they would say, "What are you, out of your mind? Not one more dollar for office, not one more dollar." That's not true for all office. Maybe one Vanderbilt, maybe some high quality office, maybe Bill's office building on Park Avenue, which people are waiting in line for, maybe a new development with an existing tenant. But in general, don't even darken my door. But I think there's a huge opportunity for a young person today to take advantage of this 70% issue.
But, hey, but
I
Rob,
hope it gets worse.
But Rob,
So there are
how many
opportunities.
cycles, we were with Larry, and whoever you asked him, how many cycles? He's been in this business since the mid-1950s. And so we are a cyclical business. And it could be economic, could be political, social unrest. You can go and, I think we're getting the high sign right here.
Okay.
But at least you didn't flash the lights on
Right.
us. But someday, hopefully sooner rather than later, the banks will be back knocking on our door.
I mean, a regional mall was, if you brought up a regional mall in a credit committee
that's the
2
power.
years ago, you would have been shot.
but that's the parallel.
You would have been shot. Now we're competing to do regional mall finances for the better mall.
But not all malls, right?
No, not all malls. Some malls should be flat and
where
make the farm
this
land.
is where some of this is cyclical and some of this is structural. Some buildings, like you said, aren't going to come back.
Yeah.
Some malls didn't come back, and
Right.
they're going to be
Pickleball
obsolete,
can't
right? And
fill
you got
all
to pick
those
the
malls.
spots.
What's that?
Pickleball cannot
can't-
fill.
Pickleball,
Exactly.
the mall in Stanford has a pickleball court. So quickly, Marty, what keeps you up at night?
Oh my God.
What keeps you up at night? Our elected officials in the state assembly and the state senate.
I sleep really well.
Marty, go ahead. Go
I
ahead,
sleep
Mary.
really well. I don't stay up at night.
You don't stay up at night? I do. You're not, when you get older, that's all you do is stay.
Look, I stay addicted to hope. It's the best form of addiction. Hope, and hope is not a plan, but the fact is, having been around a long time, it is one of these things where you just don't bet against New York. And
So when you go to sleep at night, you think about hope.
no, I'm tired.
You're tired, so you go to sleep.
It's exhausting.
It's exhausting hoping so much.
Yes.
Well, I sleep well at night because starting in January 1st, my daughter's here, and she and her brother are going
Well, I was about to bring it up, I'm sorry.
become co-CEOs of the company. My cousin and I will be co-chairs, and so I have great confidence in the next generation of leadership. I've got a lot of my team members here, our team members. So, I sleep well. I worry sometimes about the world and the future and for my grandkids, but I'm eternally optimistic and been around the block a few times. So and if I don't sleep well, I start reading my iPad and sending off articles to myself that I send around to my team members who would probably drive them
And
crazy.
me, I get my bill,
Yeah.
my bill articles.
Scott,
I was supposed to be in Israel last week and for a roadshow. So we've been doing it through Zoom, and we're meeting insurance company and pension systems. And in each one of these meetings, I open up and say, as a New Yorker or someone that lived through 9/11, as a Jew, I feel, and we're with you, our hearts are with you. We're one with Israel. And in one of my meetings, the person on the other side said, you know, and I said, and he said, I'm more worried for you than you should be worried for me. He said, because we Israelis, we know that when we're being attacked and when there's hate and terror, that our young people and our country is unite and defend it. And when I see what's happening in the United States and in places, in the college campuses, and the divisiveness and not the moral clarity around where there's you know, the hate and anti-Semitism and terrorism, you know, that is what is scary, because your people may not come to protect your society. So what scares me is divisiveness and that lack of clarity that's out there today. But also, again, when you listen to someone from Israel living through what they're living through, helps put everything in perspective, right? We're worried about higher rates for longer. Well, they're worried about how long until they get their, you know, neighbors back that are being held hostages, right? And how long until they have to deal with the you know, the Hamas and live in this age of terror. So it puts things in perspective to say this is all just you know, a game of Monopoly, and you know, we'll end up with what dollars we end up with at the end of the day.
What I've learned today, and it took me 40 years in this industry, is that we in the industry have a voice, and I think this industry has a voice for everyone in society. And I think that what's exciting about that being on this panel for so many years, that voice is often heard, and it's great to be in an industry that we could transform and eliminate hate and build for a better future for everyone in our society. Thank you very much.
Nice job as usual.
Thank you.